Artificial intelligence is creating an unprecedented demand for electricity, but generating more power is only part of the story. Before electricity can reach a data center, an entire ecosystem of equipment manufacturers, grid suppliers, and infrastructure builders must first expand the physical backbone of the energy system. In this video, we'll examine 5 companies helping build that foundation and explore where they currently stand from both a business and technical perspective. Let's begin with GE Vernova. GE Vernova is one of the most important companies in the AI power ecosystem. The company manufactures many of the technologies required to generate and deliver electricity, including gas turbines, grid equipment, transformers, and electrification systems. As demand for electricity continues to grow, GE Vernova is positioned at the very beginning of the value chain, helping utilities and infrastructure providers expand power generation and grid capacity. Now let's turn to the chart. Looking at the weekly chart, GE Vernova has been one of the strongest performers in the entire AI power theme. Since April 2025, the stock has climbed roughly 360%, eventually reaching an all-time high near $1,180 per share in April 2026. Since then, shares have entered a healthy correction phase, declining approximately 27% before finding support near the $850 area. Today, the stock trades around $970 per share. From a technical perspective, the most important support zone currently sits between $850 and $890. As long as the stock remains above this area, investors can argue that the longer-term uptrend remains intact and that the stock may eventually challenge the previous highs near $1,180 once again. However, broader market weakness or company-specific developments could trigger a deeper correction. If the current support zone fails, the next major area of historical demand appears closer to the $600 to $670 range. Next, let's move to Eaton. Eaton is one of the world's leading power management companies, providing the electrical equipment, systems, and software that help move electricity safely and efficiently from the grid to industrial facilities, commercial buildings, and modern data centers. As AI infrastructure expands, Eaton plays a critical role by supplying many of the electrical systems required to power and manage next-generation computing facilities. Now let's turn to the chart. Looking at the weekly chart, Eaton is currently approaching one of the most interesting technical setups in the AI power ecosystem. The stock is trading near a major resistance zone that was first established in November 2024 and has not yet been decisively broken. As a result, the chart appears to be forming a classic technical pattern known as a cup and handle. If this pattern successfully completes, the stock could have the potential to advance as much as 40% from current levels, targeting the $570 region over the longer term. For investors, the key level to watch is $410 per share. A decisive breakout above that level, supported by strong buying volume, would provide important confirmation that buyers are regaining control and that the next leg higher may be beginning. Of course, broader market weakness or company-specific developments could delay that scenario. If the stock fails to break resistance and market conditions deteriorate, investors could see a pullback toward the $315 area with a deeper correction potentially reaching the $230 region. For now, the $410 level remains the key battleground between buyers and sellers. Next, let's move to Vertiv. Vertiv provides the critical infrastructure that allows modern data centers to operate. The company specializes in power management, cooling systems, and other technologies that keep high-performance computing facilities running efficiently. As AI workloads become more demanding and consume increasing amounts of electricity, Vertiv has become one of the most direct beneficiaries of the rapid expansion in data center construction. Now let's turn to the chart. Looking at the weekly chart, Vertiv broke above the $201 level in February 2026, marking the beginning of a powerful advance. Following that breakout, shares surged nearly 90%, and reached a peak near $380 per share in May 2026. Since then, the stock has entered a relatively modest correction, pulling back roughly 30% and currently trading around the $300 level. From a technical perspective, the most important support zone now sits between $250 and $280 per share. As long as the stock remains above this area, investors can argue that the longer-term uptrend remains intact and that the stock may eventually challenge its previous high near $380 once again. A successful breakout above that level would signal a continuation of the trend and could be supported by ongoing demand for AI infrastructure and data center expansion. Of course, broader market weakness could result in a deeper correction. If the current support zone fails, the stock could revisit the original breakout area near $200 per share, while a more significant market downturn could potentially push shares toward the $140 region. For now, the $250 to $280 area remains the key support zone to monitor as the AI infrastructure story continues to develop. Next, let's move to Hubbell. Hubbell manufactures many of the essential components that make the electrical grid function, including transmission equipment, substation infrastructure, connectors, insulators, and other critical hardware. As utilities race to expand grid capacity to support growing electricity demand from data centers and artificial intelligence, Hubbell is positioned to benefit from the physical build-out of the power network itself. Now let's turn to the chart. Looking at the weekly chart, Hubbell broke above the $485 level at the beginning of 2026, signaling the continuation of its long-term uptrend. Following the breakout, the stock advanced steadily before reaching a high near $565 per share in April 2026. Since then, shares have pulled back and are currently testing a key demand zone between $460 and $485. From a technical perspective, this is one of the most interesting areas on the chart. The current structure offers investors a relatively attractive risk management opportunity, with the stock now trading near a major support zone created by the previous breakout. As long as buyers continue to defend this area, investors can argue that the longer-term uptrend remains intact. If demand for grid infrastructure continues to grow alongside the expansion of AI and data center capacity, the stock could eventually move beyond its previous highs and continue establishing new highs over time. For now, the $460 to $485 region remains the key support area to watch. Finally, let's look at Quanta Services. Quanta Services is one of the most important construction and engineering companies in the energy sector. The company builds and connects the infrastructure required to expand power generation, transmission networks, substations, and large-scale data center projects. As AI drives unprecedented demand for electricity, Quanta sits at the execution layer of the value chain, helping transform energy investment plans into real-world infrastructure. Now let's turn to the chart. Looking at the weekly chart, Quanta broke above the $470 level at the beginning of 2026, marking the continuation of its powerful long-term uptrend. Following that breakout, shares surged roughly 70% and reached a peak near $790 per share in May 2026. Since then, the stock has experienced a relatively modest correction of around 20% and has already recovered much of that decline, returning toward the upper end of its trading range. From a technical perspective, however, the stock still appears somewhat extended relative to its longer-term trend. While the overall structure remains bullish, investors may prefer to see a deeper correction before considering a more attractive risk management setup. The most important level on the chart remains the original breakout zone near $470. A return toward that area could provide a much clearer support level and a more favorable entry point for long-term investors. As long as the broader AI infrastructure and grid expansion themes remain intact, the stock could eventually revisit its previous highs and potentially move beyond them. For now, Quanta remains one of the strongest names in the sector, but patience may be required before a more attractive technical setup emerges. As we've seen throughout this analysis, not all AI power companies play the same role. GE Vernova builds the equipment that generates and moves electricity. Eaton manages and distributes power throughout the system. Vertiv provides the critical infrastructure inside modern data centers. Hubbell supplies key components for the electrical grid. And Quanta Services builds the infrastructure that connects everything together. Together, these companies represent the physical foundation of the AI revolution. If you'd like to explore more market themes, industry trends, and stock opportunities, subscribe to NAVIXA for structured market insights.